All right, everybody. So let's begin today's class. Yes, it is Wednesday, my dudes. So your homework, who'd like to start us off?
So, okay, so for bad investments, I couldn't really find one.
Well, just think of one. What's one that you could see or you know that definitely exists?
Well, a bad investment would be
Oops.
a bad investment would be like a bad investment would be gambling on a game that you know is rigged.
Yep, that is a very common one. Good example.
And then an equal investment.
So who'd like, so
Well, he said a bad investment, so a good investment is like using an example of lost time, like buying a car and selling it.
mhm. And what's an example?
I just gave an example.
Oh, sorry. I think my network is also being bad right now, so pardon me if I don't hear what you guys say.
Okay.
Oh, and if the video cuts out, then it'll be a pain as well. All right. So let's watch the video. The video that I put a lot of effort into. Did I forget to enable sound again? There we go.
Stocks, bonds, and real estate. Stocks. Many organizations choose to sell shares of stock to investors in order to obtain funds for their company operations. Investors receive a tiny percentage of ownership in the firm in exchange for their money, equal to the number of shares they acquire. The value of the shares improves over time if the corporation uses the cash efficiently and invests in successful ventures. If the firm loses money or goes bankrupt, the stock's value may fall. Stock in the largest firms can be publicly traded, meaning that anybody can buy and sell them on stock exchanges such as the New York Stock Exchange or Nasdaq. The price of a publicly traded share of stock is influenced by the company's profitability as well as news or economic data that may influence the public's opinion of future profitability. Stock investors can buy individual shares in a particular firm, such as Apple, or invest in a range of sector-specific, transportation, for example, or index mutual funds and ETFs. As a result, citing a return for the stock market might be problematic because it varies greatly depending on the investment decision. Bonds. A bond is a debt instrument offered by an issuer and held by a bondholder. In other terms, it is a loan granted to a bond issuer by an investor. The issuer commits to repay the principal, face value, plus interest over a predetermined period of time in exchange for the loan. Bondholders, unlike stocks, have no ownership stake in the issuer, so they don't necessarily profit from the issuer's growth, but they also don't experience much of an influence during a contraction period, as long as the issuer has the finances to make their needed payments. Governments and companies are the two main types of bond issuers. Government bonds, also known as municipal bonds, are issued by government entities that utilize the cash to pay community projects such as roads, bridges, sewage systems, and parks. The power of the issuer to charge a tax and utilize the proceeds to repay the issuance is supported by government bonds. This is considered the safest sort of bond, as the only possibility for it to fail is if the government becomes unstable or if there is a severe recession. Corporations issue corporate bonds in order to raise funding for initiatives or items that will improve their income. This cash might be used to develop a new factory or launch a new product, for example. Because a firm is more likely to go bankrupt and so be unable to pay bondholders, these bonds are not as secure as government bonds. Bond investors also have a variety of alternatives to pick from. They may buy individual bonds from a corporation or the government, or they could buy a bond mutual fund or exchange-traded fund, ETF, that holds a variety of bonds. Commercial real estate. The phrase commercial real estate, or CRE, refers to a category of real estate assets bought with the goal of profiting from cash flow, capital gains, or both. The basic principle of a commercial real estate investment is that a property is acquired for a specific price and financed using a combination of loan and equity. The property's space is leased to other firms, and the rental money is utilized to cover operating costs such as taxes and insurance. If there is any money left over at the end of the year, it is disbursed to stockholders. Investors in commercial real estate have a variety of possibilities as well. They can buy a property outright, which is similar to buying an individual bond, invest in a real estate investment trust, REIT, which is similar to a stock or bond fund, or even invest with a private equity company, which is a unique alternative investment arrangement. The importance of diversification and product/investor fit. Each investor is different, each is at a different stage of life and has distinct wants and goals in mind for their investment. Younger investors may be able to afford to take greater risk with their investments since they have a longer time horizon. As they approach retirement, older investors may have a shorter time horizon and prioritize wealth preservation and lower risk possibilities. It is essential to understand an investor's risk tolerance, time horizon, return expectations, and liquidity needs before choosing a certain form of investment. Moreover, we are firm believers in the value of portfolio diversity. This involves distributing an investment portfolio's contents among multiple asset classes in order to capture each asset's unique risk/return profile and generate a high overall return. A broadly diversified portfolio of risk assets, such as stocks, bonds, and commercial real estate, is the best option for most people.
So now in here is basically where we would begin our discussion. So if anybody has a question, comments, or agrees with anything in the video, feel free to talk now, I guess. Thanks, Mom. Let's see. Ethan? Ethan, do you have any thoughts on the video? Anything you agreed on?
I
Disagreed on?
agree with the thing with like the government bonds or those type of bonds being the strongest or safest or whatever.
Is there any questions or stuff you would like to know?
No.
No? Okay. So let's see. Candace, do you have any thoughts on the video? Anything you agreed with? Anything you disagreed with? Any questions?
I don't have any questions or comments.
Do you have anything you agreed on?
I agreed on that the government bonds would probably be the safest types of bonds.
Do you remember why they are the safest?
Yes, because this government bonds are the safest because the only way to fail is if a government loses loses a lot of money or if there's a serious recession.
Exactly. And how about you, Sean?
Honestly, I don't really have anything to say.
Here's a question. Out of those three, stocks, bonds, and real estate, which one would you pick the most? Or which one do you think makes sense for you?
I think I would pick bonds most, specifically the government bond, because I don't like to take risks, so that's what I see as the safest investment.
And it is true. It is the safest investment. So good job. So now we're just going to go over some of the material that I probably went over with you guys the other classes. And we're just going, so basically we'll be diving deeper into what we have basically went over. So stocks, bonds, and real estate are three of the most effective and because of that, the most popular methods of investing. You've probably heard of all three, but you may not know exactly how they work. These ways always contain risk, gains, and are affected by outside factors. So risk, it's bolded because it's vocab word. I'm doing it now. I forgot to do it in the past. It's the amount that you might lose, represented by a negative number, multiplied by the percent that it might happen. Gain is pretty much the same thing, but the other way. Outside factors are factors that influence the probability of an investment, but is not related to the investment itself. Oh yeah, did I do gain yet? Gain is the amount that you might gain, represented by a positive number, multiplied by the percent that it might happen. Also, I just got a message saying that I got used up 90% of my VPN, so if my internet dies, I will try to be back on. What is an example of risk and gain? Let's take an example, flipping a coin. What is, say, I'll make you a bet. If it lands on heads, I'll give you $1. If it lands on tails, you give me $1. So in this game, what is the risk?
So the risk would be 50%.
It's the amount that you might lose multiplied by the percent that it might, yeah.
So the amount that you might lose is $1 times 50%.
Yep.
How do you multiply percent?
50% is equal to 1/2. So
Oh,
what
so
is
that-
1/2 of $1?
So the risk would be 50 cents.
Yep, the risk is 50 cents. But remember, it's negative, so the risk would be
Negative 50 cents.
yep, negative 50 cents. How about the gain, Sean?
Positive 50 cents?
It's the same principle, just like that. And what would an outside factor be? Can anybody take a guess?
Maybe the wind, maybe?
Yep, the wind could be one. Sean?
The coin?
The coin itself. And one person we haven't heard from yet, Xiwen. What is an example of an outside factor that would affect the coin flipping game?
Two people that are doing the bet?
The people, yeah, I guess. And Iris said that too. Basically, that's the examples of a risk, gain, and outside factors. So first one, stocks. Stocks are what people think of first when they hear the word investment. And stocks are the most popular type of investment because they have a very good risk to gain ratio. This is what we will be focusing on in the majority of this camp. And just like investments, there can be good stocks and bad stocks. Some will give you returns that are less than what you put in, and some will give you returns that are positive. Take note, there exists a method called shorting that allows you to profit off of negative stocks, but that is a little complicated, and you can look it up if you want to, but I probably won't be teaching in this camp. In this camp, we will learn how to find the good stocks by using financial and technical analysis. Remember these terms because they will come up later. So financial analysis is the process of evaluating businesses, projects, budgets. Oh, VPN will disconnect in 5 minutes. Okay. So financial analysis is the process of evaluating businesses, projects, budgets, and other finance-related transactions to determine their performance and suitability. And the technical analysis is analysis methodology for forecasting the direction of prices through the study of past market data, primarily price and volume. So I don't think this made much sense to you. It didn't really make sense to me. But basically, I will explain it to you in kids' terms. So financial analysis is basically ringing up the company and saying like, hey, how much money are you making? How much are you paying your workers? How much toys are you making? And technical analysis is taking a look at a chart and drawing fancy lines. So there's a lot more to it than that, yes, but that's basically just summing it up. And we will dive deeper into these two concepts tomorrow or on Friday. Stocks continued. The way the investment part of stocks works is that you buy shares of a company. Shares of a company is just having ownership of a small sliver of a company. So, for example, Apple has 17.53 million shares in the world. So their company is split into that many different parts or shares. And the owner of the company owns it because they buy or they hold the majority of their company's shares. So technically anybody can be a CEO if you have enough money. Apple, the company, is worth $54.72 billion. So 54.72 billion divided by 17.53 is the price of each share. So each share is worth $145.38 as of Sunday. Are you guys all getting this?
I guess so.
All right. Well, don't be afraid to ask any questions. So the way money is made is by buying a share and selling it when its price goes up. So if the price goes from 145 to 150 and I sell it at 150, I make a $5 profit because 150 minus 145 equals $5. This is the same concept. If the price goes down, you would either make or lose the difference between these two numbers. And they can be risky, but they can also be very profitable. The rule in investments basically is the more risky the investment, the more possible gain it probably has. Next up, bonds. So bond, a type of security under which the issuer owes the holder a debt and is obliged, basically they have to, depending on the terms, to repay the principal of the bond, which is the amount of money that was lent to them in the first place. At the maturity date, which means like at this time, as well as interest over a specified amount of time. Interest is usually payable at fixed intervals. So basically it's like, you give me $10 and every year I'll pay back $1.05 for 10 years. So when you're done, I'll give you $10.50. That's basically how it works. Bonds are issued by the government or by companies whenever they need money. And so you've probably seen this in the video. So I kind of just explained this already, but they work like borrowing money. You give me X dollars and I'll give you that back with a little bit more money as well. They are very safe and thus they do not have much return. Government bonds are safe because they are secured by the government and they are almost definitely always pay the bondholders back the right amounts. Notice my use of vocabulary in here. Almost definitely always. I don't know how that works out, but I guess it does. Corporate bonds or company bonds are a bit riskier because the company could go bankrupt and not pay the bondholders. But company bonds also could be more lucrative because companies need a lot of money and they will pay more to get your money, to borrow your money. They're paying you to rent money, which is kind of weird if you say it out loud, but that's how it works. But of course, because they have more of a profit, they have more of a risk. And third, real estate. Real estate, private property in the form of buildings and land. It can also be just physical stuff. Real estate can be used for residential, means living, commercial, it's like factories. Wait, no, commercial is like office buildings. Industrial purposes, which is basically factories. It includes any resources on the land, such as water or minerals. Like if I buy a gold mine, then that would be real estate. So real estate works in the same way as stocks, but instead of a tiny sliver of a company, you are investing in a real thing. That's why it's called real estate. Whether that be tools, cars, houses, or even animals such as cows and pigs. You guys have heard of the Indiana 500, right? Wait, hold on. Is that the horse race or the car race? It's the car race. So there's the Indianapolis horse racing. And so that place is really, really, whenever that season rolls around, basically there's going to be a lot of people who want horses. So that means the price of horses go up. And the people who sell horses put them at higher prices so they can make money off of selling real estate. So yeah, once again, real estate is not limited to houses. It can be anything that is real, literally anything. The way real estate works is that you would buy property and wait for its value to increase and sell it at a higher price. Your profit would be the difference between buy and sell prices, just like stocks. If the property loses value, then you would lose the difference between buy and sell prices. This is a bit riskier than bonds because your property could be affected by outside factors, which could cause your property to lose damage, like fire. Fire could burn down a house. Pollution could basically destroy a forest that you own and it would become useless. Or even politics. Let's see, is it time for the seminar? See, what did you guys learn today? So who wants to kick us off the conversation? Today's topic is, in your opinion, which of the three investments do you like the most and why? And Sean already answered this question, so I guess he doesn't have to go. So, Sean, you can pick on somebody to go first.
James.
James? Oh, yeah.
I don't really understand the question. So,
In your opinion, which of the three investments do you like the most? Like, which one sounds the best to you?
investments I like most.
Yeah, like which one makes the most sense? Which one do you think is the best?
Well, I think bonds are the safest. I understand, and stocks and I understand stocks and real estate eat, a lot, and I think bonds are the safest.
So which one do you like the best? If you had to pick.
I'd say maybe stocks.
That is a good choice because stocks, the risk of stocks can be from anywhere from super high to super low, and so can the returns. So stocks can often be as safe as bonds, but they don't have as much return. But basically, with stocks, you have a lot of freedom to choose.
Yes.
So now you get to call on somebody.
How about Ethan?
Ethan.
My choices would be the same as him, except for my favorite one, I like real estate more
And why is that?
because it's like more tangible, I guess.
I mean, you can't break into somebody's house and steal a stock. I mean, technically you could if you took their computer, but you could break into somebody's house. My connection is unstable. You could break into somebody's house and steal their coffee table or something. But being tangible doesn't always mean it's good, but it does mean that it is there, like it has determined value. So basically, Ethan, it's pretty interesting because you can't break into somebody's house and steal their stock. I mean, you could if you took their computer, but it's not really easy to do that. However, with real estate, I could like smash a guy's window and take his coffee table. So being tangible isn't always the best, but it does mean that there is a value to the object. So that's very interesting. It's a good answer. Now you get to choose on somebody.
Candice.
Stocks.
And why? Why do you think stocks would be?
Just seems the easiest.
I mean, bonds technically are the easiest. However, there is a lot of risk involved in stocks. I mean, if you are going for easiest, you could do real estate, crowdfunded real estate. I mean, that one, basically, you can just hire somebody or get a group and be a contributor, and you would still get money, but not as much. Actually, I guess you could do that for all three of these. But yeah, keep thinking on it and try it out someday. Now you get to choose on somebody else.
Iris?
I think I would do real estate because I don't just feel like it's like more interesting than the other ones because like a lot of things also like going through.
That's pretty thought-provoking. And why do you think it's more interesting?
Well, I guess like specific to houses, like I'm interested in like design and stuff, so it'd be pretty cool to like redo the house and like rent it or like sell it for a higher price.
Yeah, that really does seem like a chill career. I know a lot of people who do real estate, and they're like the friends of my parents and stuff, or like the parents of my friends. And yeah, they say they have a pretty cool life. And it's a field that a lot of people go into because it doesn't take much time, but well, it doesn't take much effort. It takes a bit of time and you still get money.
Yeah, like my parents do it, not like a job, like as a side thing, and it does pretty good.
Well, you can do it with anything, I guess.
That's true. Yeah.
Now you get to now you get to pick on somebody else.
I don't know who hasn't went. I think Anna hasn't.
Me?
Yeah.
I would think real estate because it's like you don't have to do much. The people who like you can rent it out and like if you can rent out the house, then other people will like pay um the bank, and like basically it's I feel like it's the most guaranteed money.
Yeah. Well, the most guaranteed money is bonds, but you don't get much money. And yeah, after that it is real estate. And there is one more person that we haven't that I don't think is gone. So I guess I'll tell you what I prefer. So my preference is basically just and stocks because there's a lot of variety and freedom to it. Also because it's the one I'm most used to. Also, I'm surprised Ethan nor Alvin, well, Alvin's not here anymore, I guess, didn't call on me because you guys kept doing that last club. So let's see. Homework due Thursday. Find 2 or 3 stocks that you're interested in, and we will examine those stocks next class. So let's see. Does anybody have a stock right now in mind? I didn't hear you, James. Could you say that again?
Let me.
Could you type it in the chat?
I said I was gonna maybe look for some.
Okay. Well, when you find one, come post it in the chat.
Okay.
Okay, that was quick. Paper?
Paper is a stock?
Well, we can search up the #1 company that produces paper, International Paper, and look up their stock.
International Paper.
Let's look at the year. Oh my God. It dropped in March 2022. I thought it would. It dropped like really, really a lot. I'm surprised. It dropped. Wait, it dropped a whole lot in April of 2020. No surprise there. And it kept rising up, and then
It started to fall again.
yeah, it started to fall again. So I don't know. That's interesting.
And it looks like it's about to rise again.
It could be just going up and then back down.
Yes.
Iris says digital question mark. That's a good conjecture. I thought about that myself. Because everybody's going digital, like iPads and computers.
Yeah, true. Like what would be like a company that produces?
Wait, is the peak at like between 2021 and 2022 higher than the one at 2018?
61.21. Nope, just lower by 10 cents. Oh, the maximum.
The maximum. So all time.
All time, yes.
All time they do $99, $39.
The lowest they've ever been was in 2009. No surprise there either. Which was $5. When they started out, it was $8. Highest it's ever been was actually I think this might be $61, and right now it's at 47. So that is a pretty average company, I'd say.
Wait, I have an idea. How about Bitcoin?
Bitcoin? Oh, Bitcoin. We don't talk about Bitcoin.
Yes, but
See that?
it's grew a lot so far.
Went up, back down, then spiked, went down, spiked, went down. And so I'm no technical analysis professor, but I can see that between these two time periods, you see how there's a bit of a head and shoulders, like here, here, here. See how it kind of looks like head and shoulders of like a guy?
Yes.
That's a great drawing. So when you see that, it usually means that the stock is going to turn around and go down. But it's Bitcoin. It's not an ETF. It's not basically. Well, it's a currency, and it's yeah, kind of. Wait, I forgot what it's called.
Bitcoin.
Yeah, it's not. What is it called? Oh yeah, cryptocurrency. It's a cryptocurrency, so we can't be too sure of anything it does. Just like a meme stock.
You know
So
maybe Tesla.
Tesla. All right.
Tesla's been growing. It's been growing like 1%.
Has it?
Today is like.
Well, today compared to the last 5 days. Or 5 days. Yeah, it grew a little bit. It grew a little bit today. Grew by $22. But we're not looking at the small. We're not looking at the small graphs. We're looking at the big graphs. Like the 1-year graph. Oh, okay. Hold on, let me just do a little bit of technical analysis. Nope. If we do this, see how I'm connecting the highs and the lows?
Mute.
So you guys see how there's this line and there's this line, and they're meeting here. So basically, we're just going to take a look at this line and see if it keeps bouncing around inside, it's bound to hit something. And basically, when that happens, it's either going to go up or down. And if it goes up, then we're going to take this as our new floor. And if this goes up, then this will probably be our ceiling. And if it goes even upwards, then we will put more money into it. If it drops below, then we will probably sell. So that's just a little bit of technical analysis for you guys. Tesla, you shouldn't base everything off of technical analysis alone, because there might be stuff happening behind the scenes that you don't know about. So, but according to the technical analysis, Tesla is looking good to basically just keep your eye on it for another week, 2 weeks, 2 or 3 weeks, and see if it breaks out or not. So Tesla's got potential. So any more? Wait, Elon Musk, the founder of the Boring Company? Oh, okay. So is there any other stocks you guys want me to take a look at?
Maybe look at the 5-year scheme.
The what?
The 5-year one.
The 5-year
This is the,
Tesla? Yeah.
it's
Yep.
growing pretty well.
It was flatlining around $70 for the last, I don't know, like 3
Years. 2 or 3.
last for 3 years. And then it began to rise. And it's rising. And well, it fell in 2021. Well, 2020 it fell. 2021 it fell. 2022 it fell.
Now it's fall.
Yes, it is falling. See, this is why you shouldn't base everything off of technical analysis, because it might be wrong. Let's see. Let's take a look at another stock. Wait, does Gucci have stock? What are they doing? Oh, Kieran. Wait, hold on. Oh, not the Supreme I was looking for. So, Kering unsupported France. So this is Gucci's company, basically. Started in 2011, is surviving today, I guess. Well, their stock started in 2011. Doesn't mean their company started in 2011. So let's take a look at their graph. For, yeah, I guess 5 years, it was flatlining around like $20. And it rose up in mid 2018, consolidating for a bit. 2020 dropped, of course. We all know what happened there. And then it rose up, and then now it's dropping. Oh yeah, I know why. Because the market is in a recession right now.
Why? Because of the war?
Yeah, probably because of the war.
Oh, okay.
And a bunch of other stuff that's happening, like oil
So
prices and stuff.
Oh yeah, I have another question. Why is the oil rising?
That's a good question. I don't know.
Why is oil rising?
Well, why is oil price? We'll look that up later.
Olympics?
What drives Rubik's Cube has a stock? I'm surprised. Oh, it's an embargo on oil. So there's not oil because oil is energy, and energy runs everything.
Oh yeah, I get it.
So that's why this is not a good time to have money in your investment account right now.
Rubik's Cube is. What is that? What?
Okay. It is. Wow. The current unofficial world record is 8 minutes and 59 seconds.
Wow, that takes a long time.
Yeah. For the 1x1x1. This one.
Wait, but why does it take that long?
I have no idea.
Isn't the 1x1x1 technically always instantly solved?
I don't know. It took 8 minutes and 59 seconds for a guy to figure it out.
What? Magic cube plus.
What is a magic cube? Oh, that stuff. Oh, that's a cool looking cube. So
You know, like there are a lot of types of Rubik's cubes. Like,
yeah, because they're a company.
cubes.
Metal straws.
Metal. What's a metal straw?
It's a straw that's metal.
Oh, that makes no sense.
It's a straw made out of metal. Stock. Yeah, I don't think there's a stock for. I mean, you can get Ozark Trail. I mean,
What's Ozark Trail?
I don't know. I guess they make stuff. I've seen their company around. So basically, this is what we call a sector. So a sector is basically a group of stocks that basically do the same thing. There's like transportation, there's energy, there's communications, there's like consumer cyclical, which is basically like you want it, but you don't need it. You know, stuff like that. And there's 11 sectors in total. So I'm guessing this one is consumer cyclical. There's also raw material. Let's see. Diamond stock.
Diamond stock?
Yeah.
Okay.
What? Diamond price. I guess.
Diamond price? Well, it depends on how heavy it is, how big it is, like how much carats.
Yeah, it's like
How much carats?
if 1 carat, you can think of 1 carat as like a 1 share of a stock. So basically, this is this is the price for 1 carat of a diamond.
Whoa.
And so it has
Wait.
been going up,
What?
apparently.
You're at 28,400.
For a super ideal cut, flawless girdle thickness, medium fluorescent none. I have no idea what that is, and because I don't diamonds. I simply don't diamonds. But we can interpret this just like a chart.
What? Flawless? All I understand is super ideal. All I understand is flawless.
Huh? So we can see that had a bit of a dip right here. But once they broke this line, they went straight up. See that, guys? And we can draw another line here. That's not a good line. That's not a good line either. So we can see that this is the floor. This one is the floor, basically. And if it ever drops below that, we're going to exit. We're going to sell all of our shares or sell all of our diamonds and make a profit immediately because it's probably going to fall. So there's more technical analysis for you guys. I hope you guys like this class, and I'll see you tomorrow.
Bye.